Over the long term, the solar industry has not been a great place for investors. Only a handful of companies have generated great returns. Two of the biggest long term winners have been big losers in recent years. We've made a number of videos about these companies over the past year, talking about what's going on and asking and trying to answer the question, is it time to buy these stocks on the dip? The two that I'm talking about right now are Enphase and SolarEdge. I'm Jason Hall. This is Investing Unscripted. I'm going to take yet again another look at these companies, see if I can answer the question if now is a good time to be buying these stocks to take advantage of the eventual recovery in demand for solar. Before we get into the details, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our special link. It's fool.com/unscripted. Go to that link, check out the offer. The Motley Fool is going to give you its 10 best stocks to buy right now. Go to that link and check it out. It's going to give you a great access. It's going to give you access to some great research and some great new stock ideas every single month. All right, let's get to it. So again, this is at the beginning of the year. You see Enphase, SolarEdge stocks both down a lot, especially SolarEdge. The stock has continued to fall. If you look at it from early mid-March, we did one of our first videos of the year, making the call or trying to answer the question whether or not now is time to buy. You can see both stocks have continued to fall. We did the same thing again in May and trying to answer that question, whether or not right now is the time to be buying. And well, we can see that there seems like there's a little bit of market trying to get some interest in Enphase, and SolarEdge stock continues to fall. Again, I want to look at the bigger picture here. Let's go back over a decade ago, and you see both of these stocks have been big winners. Of course, SolarEdge has given up a lot of those gains, but Enphase is still a really big winner. All right, before we get into the details to try to answer the question, I think it's important to understand what the companies do, what is their market, what is their opportunity, what are their advantages, competitive advantages, and then we can try to answer that question once we know kind of the backstory of the businesses and what they are. Let's take a quick look and talk about how they're different and how they're similar. So as the starting point, both companies do something very similar and they compete with one another for a lot of the same customers. And that is, they make the electronics for solar panels to take the DC current that solar panels generate from the sun and turn it into AC to power your home, feed it into the grid where grid operators can use it for power. So that's where they're similar. And both of them, residential installs is the largest part of their business. SolarEdge also does some commercial. Enphase, their commercial business is very small, very much residential focused. SolarEdge does do some commercial stuff, and they're making steps to get into the utility scale, which is, again, this is the big utility scale projects where they're actually producing power and selling it back to the grid instead of offsetting the power being produced by a home or a business or something like that. So now there's also some technical differences in what they do. We'll take a look at that next. Starting with SolarEdge, millions of systems installed. They shipped over 126 million power optimizers, operate in 140 countries. We jump over to Enphase and we see 4 million systems installed, operate in 150 countries. So similar kind of size. Where they differentiate from one another is the way they deliver their solution. So if we start with Enphase, since we're on the Enphase presentation, you see right here that their technology is what's called a microinverter. So the inverter is the device that turns that DC into AC. And historically, it's been what's called a string converter. So you have, or a string inverter. So you have all of your panels, the whole solar system up to a certain size that then just runs into a single inverter. It's what's called a string inverter. So it's just one, they're all strung, the panels are strung together and then go to that one inverter. With Enphase, each solar panel has a micro inverter on it. So each panel is being managed individually. There's a lot of advantages to that. Number one, more efficiency in terms of power production. If part of the system is in shade, it doesn't affect the system that's not. And sometimes you can get issues with string inverters. Also, you don't have that single point of failure with a string inverter. If the string inverter goes out, your entire system is out. With the microinverters at each panel, if one or more of the microinverters are out, the rest of the system is still operating. So there's some benefits there. Now, SolarEdge, their system's a little bit different. They have power optimizers that are the panel level electronic, and then those power optimizers still connect to an inverter. So they still use the inverter as the central hub. So you still kind of have that single point of failure. They've improved a lot over the years, but this is their foray into that panel level electronics that's required in North America and increasingly in other parts of the world as well. Now, both companies also do batteries. Both companies also do EV chargers. And we're starting to see SolarEdge differentiate a little bit and move upstream, like I said, into more commercial applications for higher voltage panels, higher wattage panels, I should say, and even stepping into some potential smaller utility scale applications as well, where neither of these two companies compete right now. But in a nutshell, that's basically what the two companies do. They manufacture the electronics that are so important to getting the electricity from the panels to AC and getting it into the grid, connecting it to the devices that it's going to power. They have a dominant share of the market in residential distributed solar, some 90% between the two companies that they have. They've expanded overseas. Now, what's happened over the past few years is interest rates have skyrocketed. Solar demand for residential has taken a big hit. California is also a really big solar market. There were some changes in the regulatory environment that created some headwinds for residential solar there as well. So that's kind of slowed the market. So those are the things that have affected the stock price. We saw not just this year, but we go back to the chart and we see the big decline from the peak where both of these stocks are down a substantial amount. We're talking 91% decline for SolarEdge, and Enphase stocks down about 68% from the highs. So first question a bunch of people have, I'm sure, why is SolarEdge stock fallen a lot more than Enphase's stock? And I think part of it just gets back to the financial results of the two businesses here. We'll take a quick look at last quarter, the first quarter's results, and talk about the difference between the two that I think definitely has playing a big role in why SolarEdge stock continues to fall and has performed a lot worse than Enphase stock, which has done terribly if we're being completely honest. Again, starting with SolarEdge. So you see revenues, we go back to the first half of last year of 2023. Revenues were incredibly high, almost $1 billion in revenue for SolarEdge in the second quarter, and then revenues have substantially fallen off, massive declines in revenue. And in the first quarter of the year, SolarEdge, $202 million in revenue. Now, it was the expectation that it was going to continue to fall and that we're getting close to hopefully the trough, like the low point here. But let's move past just the top line and talk about the bottom line. So one thing, gross margin, negative 13%. In other words, they were selling $1 worth of manufactured goods for 87 cents, right? You can't stay in business that long. Again, that's that 87, that dollar, that's just your cost of goods to manufacture it, right? That doesn't include your operating costs, your sales and marketing, R&D, any of those operating expenses. That is purely gross margin. That was negative the past two quarters. Operating expenses as a percentage of revenues have continued to skyrocket. We remember looking at mid-teens the first half of last year, and 72% of revenues to cover operating costs. When you're running negative margins and then you're spending another 72% of your revenues to cover expenses, you end up with really big losses, $157 million GAAP loss, $173 million operating loss. So the operating loss was larger than the GAAP net loss. Some tax benefits kind of happened. So again, you $204 million in revenue and $173 million operating loss, $157 million net loss, absolute cash burn, huge losses, even as the business size of the revenues come down a lot. Let's take a look at Enphase. So Enphase doesn't have a presentation with all the pretty charts breaking everything up. So we can look at the press release and basically see it all on a single slide. So again, first quarter of 2023, we see revenue was $726 million. That first quarter of this year, $263 million. So down a ton, not down anywhere near as much as on a percentage basis as SolarEdge, but still massive drop. It's broad, it's across the industry. Everybody's being affected by this. But while SolarEdge had negative gross margins, Enphase gross margins 44%. I'll break down why the difference in just a minute. Operating loss of $30 million compared to $173 million operating loss for SolarEdge. $16 million net loss versus $150 some odd million net loss for SolarEdge. So again, still losing money. Enphase, both companies are losing money, but Enphase is losing a lot less money. One other thing that's different is the cash flows. SolarEdge first, as we've been doing here. So cash flow statement, first quarter 2024, burned $217 million in operating cash, substantial cash burn. Go over to Enphase and $41.8 million in free cash flow. So generating positive cash flow, even during this really, really tough time, generating positive cash flow. So number one, investors probably want to know, why is Enphase generating cash and why is SolarEdge burning so much cash? So number one, Enphase, I think, moved a little more quickly to downsize its manufacturing footprint, bring costs down. They shuttered a facility in Europe and they closed one of their, I believe, 3 facilities in the US, and they downsized to 2 US-based facilities, and they're moving some manufacturing capacity into those US facilities. Number one, lowers costs by reducing that size. They use contract manufacturers, so they were able to be pretty nimble about moving away from those agreements pretty quickly. And they're taking advantage of some tax benefits right now to manufacture in the US. So those tax credits are paying off with cash generation that they're able to generate right now. And again, they say they're making a plan to have more lines ready to bring on quickly when demand starts to recover. So that's in essence why they've been able to lower the costs and generate cash flow even during this environment. SolarEdge, on the other hand, they still use a lot of contract manufacturing, but they haven't been as quick and nimble to shutter facilities and reallocate resources and that sort of thing. So as a result, again, you see those negative gross margins, their manufacturing costs are just higher right now. They didn't bring those manufacturing costs down with volume the way that we saw in Enphase. Also, their operating costs are still really weighing on the business in some pretty large ways as well. So you put it together, and both operating costs and their manufacturing costs are high right now when volume and demand is low. So it's affecting the bottom line, and it's brutal. And I think the market sees that happening and is concerned that we're going to see a continued long-term downturn in the end markets, and that's really going to hurt. And Enphase and SolarEdge is eventually going to cut costs, but they're going to wait it too long and burn through a lot of their balance sheet. So I think that's what the market sees happening. That's what it's concerned at. Okay, so now the question that we still haven't answered, but we've laid the groundwork. We've explained what's going on with the industry. What happens next, and is now a time to be thinking about buying? I think things are really interesting right now with residential solar, because there's some indications that we could be approaching kind of the bottom point of the sector. Again, you saw revenues fell a ton in the second half of last year, and then the first quarter of this year was even worse. Enphase's ability to hold their margins and hold pricing, they said they've really held firm on pricing, is definitely paying off on the bottom line for that company in terms of cash generation. And they're saying they're optimistic that we're getting close to the bottom of the cycle and we could start seeing increased demand. A lot of the resellers and distributors and installers that are buying from these companies have been focused on depleting their inventory. Ideally, that depletion has happened, and just the need just for the minimum requirements to supply their ongoing businesses should be good for Enphase and SolarEdge both. So hopefully we're getting to that point. I feel confident that we are getting to that point. I'm not expecting a massive rebound anytime soon, but I am expecting a steady recovery to happen. Between the two, I think that puts Enphase in a little bit better position, because they do have the ability, again, to ramp up their manufacturing capacity to some degree relatively quickly and not miss the boat, not be late to the recovery, which is the risk when you start downsizing a manufacturing business. And they've taken that risk to really focus on managing their balance sheet. They also have a ton of cash, massive amount of cash, $1.6 billion in cash and quickly convertible securities that can be turned into cash really fast. Tons of money to put to work quickly if they need to bring capital to the table to ramp up their capacity. SolarEdge, on the other hand, they're ready, right? They've committed to keeping more of their capacity online and ready to go. There's downside risk with that, right? That if the market doesn't turn relatively quickly, then they will have burned through a lot of money unnecessarily by not moving more quickly to bring their costs down, operating costs and their manufacturing costs. But if this is really the bottom and the market's starting to turn, I think it's going to pay off and their bottom line is going to recover pretty quickly. The important thing here is that SolarEdge, their balance sheet's not quite as strong as Enphase, but it's plenty strong enough. Net cash position, plenty of cash to use to support the business right now, even as they navigate through some cash burn. So I'm not concerned about SolarEdge. I will say this, I think with both of them, there's some it's interesting from a risk reward perspective. If you watch the video we did in May and March, I said the same thing. Back then, of course, both stocks have continued to tumble since then. I also said that was still the risk, because it wasn't clear that we were at the bottom, and it wasn't clear when the market was going to start turning back in demand for solar. So that risk really still remains the same. The stock prices have come down for both. They're both still pretty well positioned to be able to recover with demand in solar. So it's the same thing I've been saying about the companies since the beginning of the year. You're taking on some risk that the downturn just lasts longer than we expect, but both have plenty of dry powder to put to work quickly if they need to. They're still the leaders in residential solar, and the long tail of demand is still really, really good for that. Solar has gotten so much more affordable. These companies have really good margins. They've been able to hold their pricing because what they produce is so important. I still think there's a really good risk reward opportunity for these, but you can't think next quarter into the year. You have to think about this as a multi-year investment to let the cycle play out. And these two winners, I think, could absolutely turn back to being big winners again. It's going to take a lot of patience, and you got to have a little bit of higher risk tolerance to be able to profit from taking on that risk.